Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today's Hump Day, and it's September 4th. We got just two economic news releases. The minor one is the trade deficit for July. This doesn't have as much import. It's minor because it doesn't have as much impact on the investor standpoint of things that we're discussing here. So back in June, we had a negative 34.5 billion, and the projection was supposed to increase to 39 billion, and it did. It basically went up to right about the forecast at 39.1 billion, so just about 100 million more. Astronomical numbers there, right? But the big one that could be a market changer today is going to be released at 11 o'clock. This is the Fed Beige Book. This is the viewpoints of the Fed members around the country, of their regions, discussing, sharing what they think the data that they're seeing in their region. So this could be something that could affect the markets after 11 o'clock Pacific Standard Time, after this has been released, and investors have an opportunity to review it a little bit. So be prepared. There could be some volatility after 11 today. But so far this morning, the stock market is currently up. Dow is touching 100 so far this morning. There are some, some of the earnings reports that are being released, so that's driving that as well. So that's kind of what the headline news is so far today. And then, so let's go ahead and take a look. It's kind of a light day today, so we'll take a look at what's going on with the bond market. And the bond market is currently down right now for the day. So we started the morning upwards a little bit, right around about 16 basis points higher, but we're right about where we left off yesterday. So yesterday we left off at 99.19 after a little bit of a rebound when we were down in the 98 range. Pulled back to 99.16. I'm sorry, 99.19, and now we're at 99.16. So right now, there's not enough to really warrant any price changes from where we left off yesterday. So right now, the rates are about the same what we left off as of yesterday. But again, that could change after 11 o'clock if there's any important news that comes out of the Fed Beige Book that kind of spooks investors, or or they get excited about certain things that maybe they pull money out of the bond market and put it into the equity markets. So kind of keep a good gauge is to watch the equity markets this afternoon. If it looks like if it's improving, know that rates are probably worsening, and vice versa. If the stock market is coming down, a lot of that money is going back into the bond market. So it's kind of a little bit of a surprise with the talk of Syria that we're not seeing more of a rally of what's going on. That typically they'll pull money out of the equity markets with the uncertainty of possible wars or attacks that potentially they want to put to a flight to safety, which is the mortgage-backed securities bonds, and that's not being done right now. So, but stay prepared. This afternoon it could be a little bit more volatile. We do have more important news this week with the jobs numbers coming out on Thursday and Friday. You got the weekly unemployment rates, and then of course we got the Bureau of Labor Statistics releasing their information on Friday. All right, folks. Thanks for watching. I hope you guys have a wonderful day, and we will see you guys tomorrow.